So Chris Hetner here. Been in the cybersecurity arena, gosh, when it was even called computer security. I'll give you all a quick story. Back in 1992, I was an undergrad student at John Jay College Criminal Justice, City University of New York, pursuing a potential career in law enforcement. So I had this nutty professor that taught a course named computer security. He sat me down in his office and he said, Chris, the bad guys are going to go from robbing banks with guns to executing complex code over computer networks. And really resonated with me and decided to not knock down doors with guns and decided to pursue a career in information security. So it's fascinating to see how it's evolved and where we are today. Been in the space for some time. For those in the audience, anybody with an engineering background here? Yeah, okay. So I appreciate your language. First half of my career wasn't in the traditional engineering. It was more of the network, Cisco, and security engineering space. I built a handful of data centers in the New York tri-state area to support mostly financial institutions in down lower Manhattan. Was the global CISO for GE Capital when we were a $500 billion financial institution, which is where I lost most of my hair. And more recently, I spent 4 years at the Securities and Exchange Commission as the senior advisor to both Mary Jo White, who was a President Obama appointee, and surprisingly enough, they decided to keep me, so I shifted to Chairman Clayton, who is an appointee of President Trump. So I was part of the team who authored the 2018 guidance on cyber disclosure. Recently joined Moody's and Team 8 to develop this new capability in the market. Extremely passionate about it. Again, I've seen the good, bad, the ugly on cyber. I'm also a board member and the National Association Corporate Directors Senior Cyber Advisor on Risk. So I'm going to be coming at you from not only an engineering perspective, but also a former CISO, former government regulator, as well as a board member. Make sense? All right, so here's what we're looking to establish here. It's really about improving the dialogue around cybersecurity in the boardroom, establishing this global standard for measuring cyber risk exposure using economic terms, and providing some level of independence in terms of how we go about this. So those are the four core pillars here. Level of independence tethered to Moody's as a credit rating agency. There's no incentive for us to remediate. This is a pure independent assessment. Level of transparency in terms of the overall methodology, looking at kind of outside in, inside out, engaging with the enterprise and bringing in also, which is the third pillar, the financial focus. How does your firm measure in terms of resilience to cyber risk? What's the level of impact from a financial perspective? And we look at various tiers ranging from business interruption, loss of data, regulatory fines. We can go through this in a few other slides. And then ultimately, what's the peer benchmark? How do you compare relative to your peers? I know as a board member, I'm always asking, okay, so how do we measure up against our peers? As a former CISO, when I was arguing for $60 million budget increase in my cybersecurity program, my CEO would ask, okay, so how do we measure up against some of the major financial institutions that are comparably regulated? So having that peer benchmark is part of the calculus. So in terms of our vision, setting the cybersecurity risk standard, there's the space is really couple-fold. It's the traditional security assessment where you've got a firm you hire. It could be a Big Four, it could be a boutique firm that conducts an internal assessment. And they typically don't have a view on cybersecurity risk relative to your business. There's really no standardization or consistency in terms of measuring cybersecurity risk. It's treated differently based on the industry, based on the types of vulnerabilities that you see relative to your environment. No comparability or benchmarking amongst across companies in various sectors. Very hard to get that information. Certainly, the measurement on financial exposure, including value at risk, has been a tremendous challenge for CISOs and leadership to articulate. Are we spending the right amount of money in order to mitigate some of this exposure? and ultimately no ability for a board to objectively measure the CISO and management in terms of overseeing their cyber risk capability. So our vision is ultimately to create this multifaceted approach, to kind of take all of the components of a traditional security diagnostic across the enterprise, looking at the management team and their capabilities, ranging from do you have a CISO, do you have an IT inventory, how often is the CISO engaging the board of directors, having that inside-out view as well, doing some targeted technical testing to gauge where you are from a hygiene perspective, looking at some probability and data loss projections based on various types of events. So looking at, for instance, business interruption versus data loss versus data integrity type of attacks, and ultimately, what's the balance sheet impact on your company? So you have a well-articulated message to senior management. Scenario-based stress testing as well. And then ultimately bringing in some of the external data. So using firmographic data that has your company, your firm, relative to a broader set of data, and then bringing that in to ultimately pull together this risk rating that provides that level of transparency and independence. If we kind of rewind the clock back in 2018, the Securities Exchange Commission issued interpretive guidance. It was voted for by the entirety of the commission. Applicable to publicly traded companies within the United States. There are roughly 6,000 issuers. And the goal here is to provide a level of transparency to investors. Not to provide a roadmap to the adversary, but to provide a level of assurance that, number one, you've got the right level of controls and procedures in your environment as part of your enterprise risk management process. There's a level of sensitivity around insider trading, particularly post-Equifax. There was a couple of executives that were trading on that activity and they found them guilty. Board oversight is certainly an elevated topic, and not only is it, hey, are you speaking or engaging with the board, but does the board have a real true appreciation of your cyber risk exposure in terms of enterprise risk management and financial exposure? In order to achieve that objective, you've got to do some level of quantification. And this is where, as a former CISO, I could tell you this took me out of my comfort zone, because it requires you to go from the tech speak to now, how do I articulate that to the business, where if I have a ransomware attack or a data destruction attack, here's what it's going to cost you. You can't perform that assessment in isolation. It requires you to bring in the folks from finance, the folks from risk management, some of the frontline P&L owners that own the business, so that everyone's in the boat and you're conducting this comprehensive analysis together as a team. Pre-incident disclosure, so you have the right playbooks, you've prepared for the inevitable, and you're also performing the appropriate testing. So those playbooks, they shouldn't sit on the shelf and collect dust. They should be tested repeatedly, and guess what? Every time you conduct a test, you're going to learn something new. Having done this for dozens of years, and one of the caveats is, while you might be running this as a cybersecurity test, you're going to quickly realize that the cybersecurity objective stops very quickly in terms of identification, containment. Now you've got an enterprise-wide exposure. So what's your regulatory pain point? What do you do in terms of restoration? If you're a power plant operator, how do you, if you're somehow disrupted, how do you commit to your customers that you're going to restore power? Communications, public relations, there's a whole downstream effect that's comprised of your crisis management program. And then ultimately, incident disclosure. This was part of the original guidance, but the incident disclosure is you as a company determining if the incident's material, it had a downstream impact on your bottom line. Based on that threshold, what's the level of commitment to record and communicate that to your shareholders? Not all incidents are created equal. You might have a virus outbreak that's maybe was quasi-painful but fairly contained, doesn't impact your bottom line. But you've got to have that spectrum of different incidents and have that playbook and get ready to disclose to the SEC and the regulators. So this is an illustrative slide. Doesn't represent any particular company, but if I think about cyber disclosure in terms of economic terms, I'd want to look at all of my exposure throughout the enterprise, running various scenarios, measuring those scenarios based on current defense mechanisms, controls, likely output, likely adversaries that are going to target my particular company. I'm going to provide some estimation. Here's my all-in cyber exposure. Now, with the level of investment I have, it could be segmentation, it could be maybe you're cutting off a series of your suppliers that represent some risk. You're going to reduce that exposure to a certain amount. These are never going to be 100% accurate, but I think you can get 70, 75% there, which is much better than what we have now. And that sets a proper dialogue to the board of directors, your enterprise risk committee, could be your CFO, to have this conversation around, here's my own exposure, here's the level of investment we have, here's what we think the residual exposure is. We've got half a billion dollars of exposure. Is this acceptable? And you make some decisions around how much of that am I willing to transfer? How much of that am I willing to accept? For a CISO, this is a great toolkit for you to inform your budget process. You may require some additional expenditure to drive some of this risk exposure down. If the board agrees that, hey, we're willing to accept that, not to say that you've got an out of jail free card, but you've at least articulated that message that, hey, we've got this exposure, we're willing to accept it, sign off on it, and move on. So, and ultimately, this rolls up to your investor community and the regulators. So some key takeaways, just run through this real quick. Ensure the board of directors, executive management are fully engaged. There should be complete transparency between management on what the key risks are and drive towards that risk tolerance level. Establish some critical benchmarks and understand how cybersecurity should be integrated as part of your overall enterprise-wide risk management program. So monitoring and identifying all your legal, regulatory challenges, leveraging the risk transfer option using insurance, utilizing peer benchmarking. You may have a cohort of companies in your space. If you're kind of down on the spectrum in terms of maturity, you may want to elevate that messaging to the board. And request a regular diagnostic, similar to how we all go to the physician. Every year we get our diagnostic and we get our health check. Request that an independent diagnostic be done to look at projection on potential losses, mitigation strategies, and some shaping of your metrics. Continuing the basics is critical, blocking and tackling. I mean, my view on cybersecurity, if you do these basics over and over again, you're likely going to reduce about 80% of your exposure. So understanding, what to protect first and foremost. Where are your core IT assets? We continue to have this conversation around IoT. I mean, if you're placing something on your network, has an IP address, it's signaling out to the internet. You have to have that categorized and cataloged and contained. So understanding what to protect and where's your most sensitive data. Provide some level of categorization in terms of risk. Ensure that your employees, particularly your executives, because your executives are highly targeted from a phishing perspective, are well trained, and that training is evolved and reflects the latest and greatest attack methods. Ensure that patching. This is basic blocking and tackling, folks. Ensuring that you have proper hygiene, proper patching, as well as configuration management. I've seen many systems, many peripheral devices back 15 years ago when I was a network security engineer that had default configuration applied to edge routers, default passwords that were completely vulnerable. So this is just basic blocking and tackling. And I can tell you right now, working with the intelligence community, working with our colleagues at DHS, the bad guys are super lazy. I mean, we can place a ton of emphasis on advanced persistent threats. We've got Russia, China, nation states that are organized, but the preponderance of the adversaries are sitting back in their pajamas and are going to look for the highest vulnerable point. And it's typically going to be based on IT hygiene, and once they got you, they're in. So keep focused on the basics. Secure application deployment. If you have in-house development or you're acquiring a third-party application, ensure you have a toll gating process. Review the code. Make sure it meets certain standards before that code base gets deployed onto your network. And as you continue to evolve those codes and those systems, ensure that you have change management processes to ensure that configuration, that coding practice is in place. Identification of the individual, authorization, authentication practices, this is security 101. Use two-factor authentication where possible. Many companies are moving away from passwords, password-less type of security where they look at behaviors, they look at the individual relative to your device, your patterns, your behaviors, and then they make some adjustments based on those patterns, which is actually quite advanced and relatively more sophisticated and makes it much easier for the CISO to protect the enterprise. Reduce the amount of sensitive data, less is better. And I'll stress this enough, establish that continuous rigor, develop that cyber muscle, and test your crisis management plans. And again, security and cyber could be a driver, but place emphasis that this is beyond the technology box. This is becoming more of an enterprise-wide exercise. So that's it. Thank you, everyone.